Welcome to Tinks Invest. We talk about investing, finance, or professional women. As a recording time of 9:29 a.m. on Eastern Time, Ethereum contract $3,091, about 1.61% so far. As you can see clearly on the left side of the chart, the overall crypto market is relatively flat to down at the moment, comfortable lying back to the next resistance level for the respective coins. We will dive into the technicals in a bit to identify what those levels are. And on the equity side, on a pre-market perspective, you can see that NASDAQ, S&P 500, and Dow Jones are all relatively flat to down at the moment, with Dow Jones currently up about 0.2%, but NASDAQ and S&P are both down respectively, approximately about down 0.3% right now. And what's driving this, well, not really a sell-off, but more of a normalization or cool-off, it's mainly due to the fact that with respect to the 10-year treasury rates, it seems like it's spiking this morning, heading towards the threshold of the 2%, right? And historically we've been kind of hovering around, in the last couple of months so far about 1.7%, 1.8%, and someday it goes up to like 1.97%. And it seems like today we are heading to more of the, upper echelon of the territory for the rates, right? And when you see, the bond rates, which is the 10-year treasury rates, spikes, it has a direct negative correlations onto the overall crypto market and obviously the equity market, knowing the fact that, it will incur, a much larger in percentage of bond interest payments that corporate investors or corporate companies will need to incur, which will subsequently hinder their earnings potential on the margin perspective, right? So that's the reason why we're seeing the sell-off, but obviously it's not a major one. And the other news that we also need to be looking out for is with respect to the Russian-Ukraine war, right? We know that there's some recent development that we heard from the U.S. military force that Joe Biden has beefed up 3,000 troops to be in support of the Ukraine border, on a defense perspective. UK is also doing so, and also we also heard from Russia that they have, put up a lot of defensive force, increased by 70% based on the specific article that we saw from CNN recently, around the Russian border, obviously, or the Ukraine border, if you may. So definitely something that we need to look out for. But with the Olympics, again, right, based on my video yesterday, I don't foresee that to be a full-on breakout. At least I hope that we won't be heading that way. But we'll see, right? And then the last catalyst that we need to look out for this week is coming up in 2 days from now, is with respect to a CPI report, right? So we know that based on the recent job numbers, it came out to be relatively rosy, right? It knocked out the park. It was like basically the Wall Street expectations in basically the low 100,000, but we actually, release a number that was basically 3 times more than Wall Street expectation, which knocked out the park with some drive the reversal we've been seeing across the board, also indicating a golden cross for, if you speak in just purely technical fundamental levels. So we'll see how that goes, right? Ultimately, the CPI report can be a negative, macro catalyst onto driving sell-off again. And I think that could be possible because of the fact that, the market's kind of looking for a reason to sell off right now. We are relatively overbought for many coins at the moment. So let's just dive into technical analysis with respect to recording time of 9:33 a.m. on the Eastern Time. Ethereum current trade $3,095, about 1.52% so far. You can see that clearly we have tested the 3,150 yesterday, and that was the level we get to, right? Because that's the next comfortable level. We hover around there, we try to get a little bit more bullish momentum, and then next thing you know, we got to somewhere around like the 3,250. But we know that that's not real level, right? The real level that we know is the 3,325, right? Which we never got to. So if you don't get there, you naturally fall back down to the next level, 3,150. So we linger on a little bit, but it seems like we're broke below that right now. So we are at the 56 out of 70, curving down a little bit right now. So a natural cadence going forward should be coming back to a low 3,000, hover around there. And if we even have more negative pressure because of the negative CPI report, or if the war actually full on breakout despite the Olympics, and if the interest hikes, continues, to 2% in a progressive manner, we should technically come back down to 2,853, which is the next comfortable level, right? So Bitcoin right now is at the comfortable level, again, the 43,500, which is the exact level to identify, right? So next level, if we come back down, we are at the 62 out of 70 right now, would be somewhere around like the 40,000. So I would recommend just hold right now, not really sell or buy at the moment. I would just hold because, coins are like, especially crypto, like to illustrate a relatively more of a parabolic movement can be possible. But if you believe in these assets long term, in terms of incurring risk based on the risk management level, the frames are still intact. It makes sense to to incur risk, but I think the more opportune time in a short term perspective should be coming, and we still have some uncertain factors out in a foreshadow perspective in the next couple of days, so we need to watch out for. But I think anywhere from the current level to 40,000, I guess 40,000 to 37,500 are still full on a good buying level for you to incur risk at. Dogecoin is down about 5% at the moment, 1568. I like anywhere from 1425 all the way to 12 cents with the 53 out of 70. So we are curving down right now. So more bearish momentum is happening for Dogecoin. It's going to be a little bit more prominent compared to Ethereum. So coming back down to the next comfortable level, 1376 all the way to 12 cents would be logical for you to incur risk. Cardano is currently at the 117 right now. I like anywhere from 102 to 92 with the 52 out of 70. So definitely not the current level, that is the best opportune time for you to incur risk. I think 102 to 92 is still the best. Solana is down about 7%. Again, anywhere from the 95 to 80 is still better level for us. Right now, the 46 out of 70. So not the best, not the worst, but I'll wait for it to cool down. Right now, it's definitely not the time to buy, despite being red down 7% at the moment. XRP is still surging, up about 9% right now. 70 out of 70, very overbought. I think this is a recommended sell level. I think this is relatively too fast, too strong. That changed the momentum in a way, right? That changed the game in a way as well. So we have to reframe our logical frame of perspective. Right now is shooting up way too fast, so we know that whenever things goes up too fast, too strong, you need to come back down, just as fast and just as strong, right? So I think ideally anywhere from the 60 all the way to 57 is still the level that I would incur risk at technically. Polkadot is down about 4.31%. I like anywhere from basically 1850 to 1587. Right now it's at 50 out of 70, so very mediocre at the level. ALGORAND is about 7%, $1.01. I like anywhere from basically 93 to 79 from here. Shiba Inu is down about 2%. Though you could see that we shoot up really, really fast, and I recommended a sell signal, recently. And I think we are at the 52 out of 70. Again, right, anywhere from the low 2000s to 1400 to 900 from here is still better level for us. Maca is down about 5%. Anywhere from 143 to 120 still better level for us. AVAX is $90 right now, almost $90, 85 right now. I like anywhere from 59 to 50. Right now, this is a relatively large gap. We're at the 60 out of 70, so not the best, really, to be honest with you. Terra, which is Luna, is down about 5%. I like anywhere from, well, the frames that we know is 62, 52, and 45, right? So we are basically $4 above the level, or about like $5 below. So we are kind of hovering, levitating at the moment. Not the best, not the worst, at the 45 out of 70 right now. So probably not the best time to incur risk for many of the coins that we see in front of us right now. I think we still need to wait for a lot of the coins to cool down. So I think the collective perspective based on my risk tolerance is to really just hold right now and just watch how the CPI report comes out, and see how that goes from there. Once we get through the hoop, I think we should technically be gliding nicely, because the next major catalyst that's coming is basically in sometimes around March with the FOMC meeting, right? So appreciate you for dropping by this morning on this Tuesday. Have a great one, and let me know if you have any questions. Take care. Bye.